Welcome to TradeTheMBI.com. This is John's reports for the 28th. This ABM yellow right up at this range continues to be difficulty for the market to get past at the 649.50 range. We keep trading right against it, and that's just that flat line that you're seeing right here, caught between the MBI red and cyan colors right there. From a DOC standpoint, it's just this continuation with the orange between cyan and red leads to continuation. Of course, now we got a pop up of the orange. That's potentially problematic because ideally, for a bull kind of situation, you would expect orange to dip below to give you that impetus push. Otherwise, this tends to bleed along and then start to fade. Yeah, it's just what happens in these particular cases. And this is just like we've talked about. There were just not enough shorts to drive things into a further frenzy. Potentially, that starts to change. We're back up to 2. We were at 1 for MBI white readings. So that's like just everyone's capitulated and agreed that the only upside is the answer. And that's usually when things begin to start to fall apart. From an NQ standpoint, we talked about this, the divergence between the two, and you can see it trading between previous algo levels. If you go back to the S&P as well, same situation. We're slightly above it comparative to the NASDAQ, and that's the relationship at this particular stage until that smooths out and we get similar readings. You can see definitely the difference in the MBI readings here. Magenta well below yellow and MBI white rising. So, the idea was that, NVIDIA will save the day and clarify that to bring it in alignment with the S&P at this particular stage. The perfect plans that are always publicized. From a treasury standpoint, traders realize there's just no money in this situation when you're outside of the normal yield curve. And at this particular point, it's just a crazy trade to be in treasuries when your yield is negative. They've been doing that for most of the year. Oil faded off a little bit from that previous spike, but again, vulnerable to any kind of Middle East action. And again, this is relative to economic activity. If there is a significant slowdown, that will be a precipitous decline, which would then justify the Fed doing something with this particular level. Inflation is still going to find the rate of inflation will be less, but that doesn't mean prices won't still be going up, because they will be. From a euro, of course, this has all been a bonus for the eurozone, even though they have zero growth. It doesn't matter. It's the fact that the U.S. is going to be softening their position, so it gives them an edge in somebody's mind. From a gold standpoint, still at the highs, and it's going to continue to break out into new highs. No question about it. It's just relative to where oil trades or how much extra spending gets jumped into it. Had an interesting sell-off here for Bitcoin, and that broke below magenta under yellow, and that caused a fade off here, as well as steel breaking down. So that's pretty clean from a short standpoint. Coming right back to its previous algo level right here at the 57,830 range, finding a little bit of support off that at this particular stage, and also seeing difficulties for ETH. And it becomes really interesting because miners at this particular stage are losing money hand over fist processing bitcoins, particularly if they're paying for electricity. With the halving, there's just no return. So it's their version of a very weak period. From an ES 50K, so we talked about this before. We had the MBI white spike. Magenta fades. That leads to the move to the 50%. 50%, we were still looking at weakness. It did break down below the 50%, but that's when magenta popped back over. And so that was the cover point right around that 38%. It then tried again to make the move, but magenta was still over yellow at that stage, and it overtook it. And now we've created another MBI white spike. So as soon as magenta fades, we'll have another move back towards 50%. We'll see if that's able to hold. If not, then we would be looking more towards that 0%. But again, previous algo levels right here, sandwiched right between the two of them. Accident? No. So take that for what it is, and realize that we're in that consolidation period as they're trying to figure out, what the Harris trade will be versus Trump trade. And now, that things have moved towards the Harris trade, how much of it will be, something that they can move in and out of depending on how things change. 75 days left. From an intraday standpoint, you can see how it was just faded in the morning from the European session, and then, of course, the open killed all that gamma on the options, and then people bought a bunch of the calls, and then they faded those, and then went back up to the calls again. And this is exactly what we're seeing. And this is that forced reaction based on what's happening in the option trade. And here in the European market, we've seen the decline, and it's all been bought back up. So we're back to right at the neutral point. All good, clean and simple. And we'll just keep doing the same. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.